What if I told you that one single decision could change the entire future of XRP overnight, and not just a small move, but something so massive that it could shock the entire crypto market and send prices into levels most people think are impossible? Because right now there is a growing discussion around a move so extreme that it could instantly reduce supply, create panic among investors, and trigger a price reaction that no one is fully prepared for. And if you are holding XRP or even thinking about it, then what you are about to hear could completely change the way you see this asset from today onward. Right now, there is a shocking idea circulating in the XRP community that is catching serious attention. And that idea is the possibility of a massive burn event where a huge portion of the total XRP supply could be permanently removed from circulation. And when we say huge, we are not talking about small percentages or minor adjustments. We are talking about a scenario where nearly half of the total supply could be taken out, which immediately raises one important question in every investor's mind. What would happen to the price if such a move actually took place? To understand why this idea is creating so much noise, you need to first understand how supply and demand works in the crypto market. Because price is not just about hype or news, it is deeply connected to how much of an asset is available versus how much people want it. And XRP already has a fixed maximum supply of 100 billion tokens, which means, unlike some other cryptocurrencies, no new tokens can be created beyond this limit. So, if a large portion of that supply suddenly disappears, the remaining tokens automatically become more scarce. Scarcity is one of the strongest drivers of price in any market. And this is exactly why people are reacting so strongly to this idea. Because if half of the XRP supply is burned, that would instantly reduce the available tokens in circulation to a level that has never been seen before. And when supply drops that aggressively while demand either stays the same or increases, it creates upward pressure on price, sometimes very rapidly. Now, here is where things get even more interesting because XRP is not just another random cryptocurrency. It has a very specific use case tied to cross border payments and financial systems. And many supporters believe that if adoption continues to grow, demand for XRP could increase significantly over time. So, if you combine rising demand with a sudden drop in supply, the impact could be extremely powerful. However, it is very important to understand that this idea of burning half the supply is not something that has been officially confirmed as a plan. And that is where a lot of confusion is coming from. Because in the crypto space, rumors, theories, and community discussions can sometimes spread very fast and start to feel like reality, even when they are not officially announced. So investors need to stay careful and separate speculation from actual developments. At the same time, the reason this topic is not being ignored is because XRP already has a built in burn mechanism, although it works very differently from what is being discussed here, because every transaction on the XRP ledger destroys a very small amount of XRP as a fee, which slowly reduces supply over time. But this process is extremely gradual and nowhere near the scale of what people are currently talking about. So when someone suggests burning half of the total supply, they are talking about a completely different level of action, something that would require a major decision and coordination. And naturally, that raises questions about whether it is even possible. Who would control such a move and what the consequences would be, not just for price, but for the entire ecosystem. Another key factor to consider is market psychology, because even the idea of a massive burn can create strong reactions among investors. Some may see it as an opportunity and start buying aggressively, expecting prices to rise, while others may become cautious and wait for confirmation. And this mix of emotions can itself drive volatility in the market even before anything actually happens. This is exactly why you are seeing so much attention on this topic right now, because it touches on one of the most powerful forces in crypto, which is the combination of scarcity, speculation, and future expectations. And when these elements come together, they can create movements that are much larger than what traditional markets usually experience. As we move forward, the big question is not just whether such a burn could happen, but what it would actually mean for XRP in the short term and the long term. And more importantly, whether the idea of prices jumping to extreme levels like $10,000 is realistic, or just another example of market hype that needs to be carefully analyzed before making any decisions. Now, to really understand whether this kind of massive burn could push XRP to extreme price levels, you need to look deeper into how price is actually formed in the market. Because many people assume that if supply is reduced, price will automatically jump to very high numbers instantly. But in reality, the situation is much more complex and depends on multiple factors working together at the same time. First, let's focus on the idea of valuation, because price alone does not tell the full story. What really matters is the total market value of the asset, which is calculated by multiplying the price of one XRP by the total number of tokens in circulation. And this is where things start to become very important when people talk about prices like $10,000 per XRP, because even if the supply is reduced significantly, the total market value required to support such a high price would still be extremely large. For example, if half of the supply is burned and around 50 billion XRP remain, a price of $10,000 per token would push the total valuation into hundreds of trillions of dollars. And that number is far beyond the size of most global financial markets today. So, for such a price to become reality, it would require not just a supply shock, but also a massive and sustained increase in global demand, adoption, and capital flowing into XRP from institutions, governments, and financial systems. This brings us to the next critical point, which is adoption, because XRP's long term value is closely tied to how widely it is used in real world financial systems, especially in cross border payments. And companies like Ripple Labs have been working for years to position XRP as a bridge currency for fast and low cost international transactions, which is very different from many other cryptocurrencies that rely mainly on speculation. If adoption increases in a meaningful way, meaning banks, payment providers, and financial institutions start using XRP regularly, then demand could grow in a stable and sustainable manner. And in that scenario, even a moderate reduction in supply could have a strong impact on price over time. But without that level of adoption, a supply burn alone may not be enough to support extremely high valuations. Another important factor to consider is liquidity, because markets need enough active buyers and sellers to function properly. And if a large portion of the supply is suddenly removed, it could reduce liquidity and make the market more volatile, which means prices could move sharply in both directions, not just upward. And this kind of environment can be risky for investors who are not prepared for sudden changes. At the same time, you also need to think about how such a major decision would be perceived by regulators and institutions, because burning half of the supply is not just a technical action. It would send a strong signal to the market and could raise questions about control, governance, and long term stability. And in the current global environment where regulation is becoming more important, any major move like this would likely attract significant attention. There is also the issue of trust, because investors need to feel confident that the system they are participating in is stable and predictable. And while a large burn could create excitement and short term price movements, it could also make some participants question whether similar drastic changes could happen again in the future, which might affect long term confidence. Now, this does not mean that a burn would have no positive effect because reducing supply is generally seen as a bullish factor. And even smaller burn mechanisms have historically contributed to price appreciation in different crypto projects. But the scale and context matter a lot, and expecting an immediate jump to extremely high price levels without strong supporting fundamentals is where many people can get unrealistic expectations. Another angle that is often overlooked is timing, because even if something like this were to happen, markets do not always react instantly in a straight line. Sometimes prices move in phases, with initial excitement followed by corrections and then longer term trends based on actual usage and adoption. So the idea of an immediate jump to a specific number can be misleading. So when you hear claims about XRP skyrocketing to very high levels overnight, it is important to step back and analyze what would actually be required to support such a move, not just in terms of supply, but in terms of real demand, global adoption, market structure, and investor confidence, because all of these elements need to align for a sustainable price increase. As the discussion continues, the next step is to look at whether such a massive burn is even possible in practical terms. Who would have the authority to make that decision, and what challenges would need to be overcome before something like this could ever move from theory into reality? Now, the biggest question that naturally comes up at this point is whether something like this is even possible in the real world. Because talking about burning half of the entire XRP supply sounds powerful, but when you look at how the system is actually structured, the situation becomes much more complicated and far less straightforward than many people assume. To begin with, XRP is not controlled in a simple, centralized way where one single entity can just decide to remove tokens from circulation whenever they want. And while Ripple Labs does hold a significant amount of XRP in escrow, that does not mean they can simply wake up one day and burn half of the total supply without consequences or without broader implications for the network, because XRP operates on a distributed ledger where validators and network participants play a role in maintaining consensus. The escrow system itself is an important part of this discussion, because a large portion of XRP is locked in time based releases that are designed to provide transparency and predictability to the market. And this structure was created specifically to avoid sudden shocks and to build trust among investors. So, if a massive burn were to be proposed, it would likely involve those escrowed tokens, which introduces another layer of complexity. Burning tokens from escrow would not just be a technical action, it would be a strategic decision that could impact long term planning, partnerships, and the overall vision for XRP's role in global finance. And this is why such a move cannot be viewed in isolation, because it would affect multiple aspects of the ecosystem at the same time. Another key factor is network consensus, because for any major change to be accepted and recognized across the XRP ledger, there needs to be agreement among validators. And while smaller adjustments and updates can be implemented through established processes, a decision as extreme as burning half the supply would likely require a level of coordination and agreement that is very difficult to achieve in practice. There is also the legal and regulatory side to consider, because XRP has already been at the center of regulatory discussions, especially involving the US Securities and Exchange Commission, and any dramatic move that affects supply and price could attract further scrutiny, which might slow down or complicate the process even more, especially if authorities view it as something that could impact investors on a large scale. At the same time, you have to consider the incentives of different stakeholders, because not everyone in the ecosystem would necessarily support such a burn. Some holders might see it as positive due to potential price increases, while others might be concerned about the long term effects on stability, adoption, and trust. And when interests are not fully aligned, reaching a consensus becomes even more challenging. Another practical issue is the purpose behind such a move because, in most cases, large scale token burns are used to address specific problems like oversupply or to adjust token economics in projects that rely heavily on inflation. But XRP already has a fixed supply and a built in burn mechanism through transaction fees. So the argument for an extreme burn is not as strong from a purely technical or economic perspective. This leads to an important realization, which is that while the idea of burning half the supply sounds exciting and can create strong reactions in the market, turning that idea into reality would require overcoming multiple layers of technical, regulatory, and strategic challenges. And each of these layers adds uncertainty to the entire concept. It is also worth noting that the crypto market is highly influenced by narratives, and sometimes a powerful narrative can spread quickly and create the impression that something is more likely than it actually is. And this is why it is important to separate what is technically possible, what is realistically achievable, and what is simply speculation driven by market excitement. Now, even though the probability of such an extreme burn happening may be low, the discussion itself is still important because it highlights how sensitive the market is to changes in supply and how quickly expectations can shift based on new ideas or rumors, and this alone can influence price movements in the short term. As we move forward, the focus now shifts to how the market could react if such news, whether confirmed or just rumored, continues to spread. And more importantly, how investor behavior, emotions, and expectations could drive price action even before any real change in supply takes place. Now, this is where things become even more intense because in the crypto market, perception can sometimes move faster than reality. And when a narrative like a massive supply burn starts spreading, the reaction from investors can begin long before anything is officially confirmed, which means the price of XRP could start moving based purely on expectation, speculation, and emotion rather than actual changes in supply. When people hear a statement like half of the XRP supply could be burned, the first reaction for many investors is urgency because they immediately think that if supply is about to drop, then the current price might be the lowest opportunity available. And this kind of thinking often leads to aggressive buying behavior, which can push the price up quickly in a short period of time. At the same time, experienced traders tend to approach these situations differently because they understand that hype driven movements can be temporary. And while they may participate in the momentum, they are also prepared to exit positions quickly if the narrative starts to weaken. And this difference in behavior between new investors and experienced participants is what creates sharp volatility in the market. Another important dynamic to understand is how social media and online communities amplify these narratives because once a topic starts trending, it can spread across platforms within hours, reaching millions of people who may not fully verify the information before reacting to it. And this creates a cycle where more attention leads to more buying, and more buying leads to further attention. Influencers and large accounts also play a role in this process because when they discuss or support a certain idea, it can add credibility in the eyes of their followers, even if the information is not officially confirmed. And this is why some market movements appear to come out of nowhere, when in reality they are being driven by rapidly spreading narratives. However, this kind of environment also carries risks because if the expected event does not happen, or if new information contradicts the original claim, the same momentum that pushed the price upward can reverse just as quickly, leading to sharp corrections that catch many investors off guard, especially those who entered the market based on emotion rather than careful analysis. This is often referred to as a buy the rumor, sell the news pattern, where prices rise during the buildup of a narrative and then fall once reality sets in. And in the case of XRP, if the idea of a massive burn continues to circulate without confirmation, the market could experience multiple waves of excitement and correction before any clear direction is established. It is also important to consider the role of institutional investors in this scenario because, unlike retail traders, institutions tend to rely on confirmed data, regulatory clarity, and long term fundamentals before making large investments. And while they do monitor market sentiment, they are less likely to react to unverified claims, which means their participation may not increase unless there is solid evidence supporting the narrative. This creates a gap between short term and long term market behavior, where retail driven hype can move prices quickly in the short term. But sustained growth usually requires institutional support, real world adoption, and consistent demand. And without these factors, price movements driven by speculation alone may not last. Another layer to this situation is risk management, because when volatility increases, the potential for both profit and loss becomes higher. And investors who do not have a clear strategy may find themselves making decisions based on fear of missing out or panic during corrections, which can lead to poor outcomes over time. So while the idea of XRP skyrocketing to extreme levels may sound exciting, it is important to recognize that markets do not move in a straight line, and every strong upward move is usually followed by periods of consolidation or correction, especially when the movement is driven by speculation rather than confirmed developments. As this narrative continues to evolve, the most important thing for any investor is to stay focused on verified information, understand the difference between possibility and probability, and avoid making decisions based purely on hype, because in a fast moving market like crypto, staying informed and thinking clearly can make a significant difference. Now, as we move into the final part, the focus will shift toward what all of this means for you as an investor, how to approach situations like this with a balanced mindset, and what key points you should keep in mind before making any decisions based on such powerful but uncertain narratives. Now, after looking at all sides of this situation, the most important thing is to bring everything together and understand what this actually means for you as an investor. Because in the end, headlines and bold claims may grab attention, but real success in the crypto market depends on how you interpret information and how you act on it in a disciplined and balanced way. The idea of a massive XRP burn, especially something as extreme as removing half of the total supply, is without a doubt powerful and attention grabbing. And it clearly shows how quickly a single narrative can spread across the market and influence expectations. But at the same time, it also highlights the importance of separating speculation from confirmed reality. Because as of now, there is no official confirmation that such an event is planned or even under serious consideration. That does not mean XRP has no potential, because it remains one of the most discussed digital assets in the space with a strong focus on real world financial use. And companies like Ripple Labs continue to build partnerships and expand use cases around cross border payments, which is where long term value is more likely to come from rather than sudden and extreme supply changes. If you look at the bigger picture, sustainable price growth usually comes from a combination of increasing demand, growing adoption, regulatory clarity, and overall market confidence. And while supply reduction can play a role, it is rarely the only factor that drives long term value, especially in a market as complex and fast moving as crypto. This is why it is important to approach bold claims like XRP will reach $10,000 immediately with a critical mindset. not by ignoring them completely, but by asking the right questions, such as what conditions would be required for that to happen, how realistic those conditions are, and whether there is any verified information supporting the claim, because these questions help you move from emotional reactions to logical decision making. Another key point to keep in mind is patience, because many investors enter the market expecting quick gains based on viral narratives. But the reality is that most successful strategies are built over time, focusing on understanding the asset, following reliable updates, and managing risk carefully rather than chasing every new trend that appears. It is also important to diversify your thinking, because putting all your focus on one scenario, especially an extreme one, can limit your ability to see other opportunities or risks in the market. And a balanced approach often leads to better outcomes than reacting strongly to a single piece of information. At the same time, staying updated is still very important, because even though this specific burn scenario may not be confirmed, developments around XRP regulations and global adoption can still have a significant impact on price over time, and being informed allows you to respond more effectively when real opportunities appear. In situations like this, discipline becomes your strongest advantage, because the crypto market is designed in a way that tests emotions constantly, whether it is excitement during price increases or fear during corrections. And those who are able to stay calm and make decisions based on facts rather than hype are usually in a much stronger position in the long run. So instead of focusing only on the possibility of extreme price targets, it is more useful to focus on understanding the market, tracking real developments, and building a strategy that works for your own goals and risk level, because this approach is much more reliable than depending on sudden and unpredictable events. Financial disclaimer: this content is for informational and educational purposes only, and should not be considered financial advice, because the cryptocurrency market is highly volatile and prices can move up or down at any time without warning. So always do your own research before making any investment decisions, and never invest money that you cannot afford to lose. And if you find this kind of breakdown helpful and want to stay updated with the latest insights and market discussions, make sure to like the video, share it with others, and subscribe for more content so you do not miss important updates in the future.